GST has supported plenty of business people and even for the young entrepreneurs to enter into the business sector from the manufacturer till the consumer, the set off, whatever they made here, that is called chain set off, and the cascading effect means tax on tax has been avoided. IGST will be apportioned between center and the states in the manner provided by the parliament as per the law, as per the rules and regulations framed under GST. Warm welcome to 6M BBA student. The subject we are discussing, goods and services tax. In our first unit, we have discussed about the brief introduction of GST and what types of taxes are there in our Indian tax structure and how the journey was there of our GST. In today's session, we are going to discuss the Unit 2, Goods and Services Tax Framework and definitions which are required to know about which terminology, how they've defined, and what things are included and excluded from the meaning of GST for certain words in the tax process. I'm Professor Rajesh L.R. from Department of Commerce and Management, Vidhyaashram, First Grade College, Temple of Excellence, MYSURU. Today's agenda is very simple here. In today's session, we are going to discuss the introduction of GST and features of GST in India, the Constitution of 101 Amendment Act of 2016. And next, we are going to discuss in simple way what is GST, advantages GST, one nation, one tax, and dual GST model we are going to discuss in today's session, which is going to support you people to know for your business as well as for the examination point of view. And you can gain center marks if you know the concepts and understand and get through with the information easily. The introduction to GST. GST is the most ambitious and remarkable indirect tax reform in India's post-independence history. They're saying that when after independence, the GST, what they brought to the nation, it is a great remarkable and we can't forget the concept. And GST has supported plenty of business people and even for the young entrepreneurs to enter into the business sector and how it is supported, we are going to discuss in today's session or in the future, one by one concept, whatever we have. Main objective is to levy a single national uniform tax across India for all goods and services. They're saying that one. Why we brought GST? To have uniform tax at all the states wherever the goods are moving from one place to other place. The tax rates, it should be the same and it should not be different from state to state or place to place or for the business to business here. They said that one, here it is going to be uniform tax rate. Like for example, in GST we have 5%, 12%, and 9%, plus 9, that is 18% and 28%. So this is the four what we have, 5%, 12%, 18% and 28%. All the goods and services will come under this bracket only, and wherever you go, the same GST is applicable wherever we are. So now it has supported plenty of people and even the doubts or the problems facing by the business people has come down with the uniform tax rates, and it is supported to them in a different way also, where we are going to discuss in the upcoming session. GST has replaced a number of central and state taxes, made India more of a national integrated market, brought more producers into the tax net. They're saying that one. By introducing GST, majority of the producers are coming now under tax bracket, which they're not following the rules and regulations of the tax process, or they're not furnishing the details properly. After introducing GST, now majority of the business people, manufacturers and other people, now they're coming under the bracket of tax, and they came to know what are the benefits are there if we adopt the tax process in our business and how it supports and how it guides us and how it is going to be benefited for the business as on today and for the future aspects also. Next, we have here, by improving efficiency, it can add substantially to the growth as well as government finance. There is in that one, as the GST came into force, it started to increase the finance for the entire central government as well as for the state government to support for the public itself, to the society only. Whatever the amount collected by in the form of tax by the central government or state government, the same are used for the benefit of the society and not for the political parties here. Implementing a new tax encompassing both goods and services, means goods as well as services, by the center and the states in a large complex federal system is perhaps unprecedented modern global tax history. They're saying that one, we are not in a position that one. Earlier, we were not doing that one, where the goods were traveling and from where the goods came, the journey of the goods, like from the beginning of the raw material till the finished product, where it has moved, we were not doing anything. Now, I can easily identify from where the raw material has started to travel and where it got complete finished final output for the raw material and who has purchased that or in which place, but not the consumer name we can't provide here. At least we can know that the simple concept here, where the goods has been sold in which area. So we can identify easily, and it is benefited for the nation as well as the business people as well as for the consumer also. Earlier, the business people were paying the tax and the manufacturers, like for example, manufacturers, wholesaler, retailer, consumer. In all the 4 stages, for every stage, the tax was levied and it was paid by, at every stage, the manufacturer was paying the tax. Wholesaler was paying the tax, retailer was paying the tax, and consumer. Now, whatever the tax paid by the manufacturer is going to collect from the wholesaler. Like for example, if the manufacturer has paid tax here 100 rupees, and if he collects 150 from the wholesaler, he is going to adjust this 100 rupees and is going to pay to the government only 50 rupees. Now, the wholesaler, he collects rupees 200 from the retailer. He adjusts this 150 and the difference 50 is going to pay to the government. And finally, the retailer is going to charge GST at 250. It is an example. Now, out of 250, retailer will adjust 200 and is going to pay tax 50. So 100 plus 50 plus 50, it is nothing but only 250 we are paying the tax to the government here. Earlier, we were paying 100 plus 150, 250 plus 200, 450, 450. That is totally, earlier I was paying 700 rupees tax. Now where I'm going to pay only 250, and it is paid by the ultimate consumer and not by the manufacturer or wholesaler or retailer. This is a benefit what they got from the GST. It is essentially a tax only on value addition at each stage, and a supplier at each stage is permitted to set off what I showed you, the set off they're going to do. From the manufacturer, from the wholesaler, whatever the amount is collected by the manufacturer is going to set off. From the retailer, whatever the amount is collected, wholesaler is going to set off. From the consumer, whatever the amount collected, retailer is going to set off, and final amount will be paid to the government. This is how the set off concept what we have here, and it is benefited for both the people here. Ultimately, the burden of GST is borne by the end user. End user is nothing but the final consumer. The final consumer is going to pay the tax and not by the middleman or where the journey is made by the goods. At each and every stages they have paid the tax, but it has been set off. That is nothing but we are going to call it as a input tax credit has been given at every stages, and that has been adjusted, and now the remaining amount is paid by the consumer. The final taxpayer will be a consumer and not by the manufacturer. This is the essence of GST. GST taxes only on the final consumer. Hence, the cascading of taxes, tax on tax is avoided. Tax on tax is avoided. Earlier, 100, 150, 200, 250 means tax on tax, it was levied. Now, that has been reduced and they made only one tax, one nation, one tax concept was introduced here. There was a burden tax on tax in the pre-GST system, central excise duty and the sales tax system of the states. So, in the central, it was excise duty, and the state, it was sales tax, where for the same product, they were levying the tax which was already tax was collected by the government. So it was a burden, and the prices were also huge. Now it came to a normal position here. Next one, further it has also captured certain value additions in the distributed trade. They said that one earlier there were different types of taxes were there that has been merged together and they made one tax, that is nothing but GST, and no other taxes are there. And in that GST they divided into such a way that one IGST, CGST, SGST, UTGST. We are going to discuss in the upcoming sessions. There is a continuous chain set off which would eliminate the burden of cascading effect. That's already I said you people that here the same chain of set off from the manufacturer till the consumer, the set off whatever they made here, that is called chain set off, and the cascading effect means tax on tax has been avoided. It would end the long standing distortion of differentiation treatment of manufacturing sector and service sector. They're saying that one earlier it was totally different, manufacturing separate and service sector. Now it is more, both are merged together, and they're saying that one the same concept has to be adopted, either it is a manufacturing or service industry. The tax rate of 5%, 12%, 18%, 28%, and no difference between manufacturing and service. This is a concept what we have. Features of GST in India. The first feature we have here, the main concept is supply as the base for calculation of GST. The main concept here, supply, means the goods has to be supplied from one person to the other person. And next they're saying destination based tax. They're saying that one always the origin concept will be taken here. The previous principle of origin based taxation, GST would be based on the principle of destination. Earlier it was origin, now it is the principle of destination based consumption taxation. This is a major concept what they made here. The third feature, dual GST, means double, that is nothing but CGST and SGST, or CGST and UTGST. This is a concept. Means the tax amount whatever they are collected, it is given benefit for the central as well as for the state also. Interstate supply, what we have here, an integrated GST, IGST would be levied on interstate supply of goods or services. They're saying that from one state to other state, if we supply the goods or services, where they're going to charge the GST in the form of IGST. This is for inter-supply. So remember this one, it is for inter-supply, CGST and SGST. This is for intra, means inside the state and outside the state. And CGST, UTGST, this is inside the union territory. Inside the union, this is also intra-supply. So we have two types of supply concept here, inter-supply and intra-supply. Inter-supply where moving goods from one state to another state, or the services from one state to other state, they're going to charge IGST and the benefit will be given to the central government. And in the intra-state, that is internally the transaction which has taken place, the tax benefit will give for central as well as state, or central as well as union territory. For both, they're giving the benefits, and the tax will be divided into equally. Like for example, it is 5% means, so 2.5, 2.5. Or for example, if it is 12% means 6%, 6%. If it is 18, 9%, 9%. Like this, equal amount of tax contribution made between the state as well as central, union territory as well as central. And next we have here central taxes subsumed, means merged. So GST would subsume the following taxes that were levied and collected by the central government. The central excise duty, which were there levying, additional tax of excise, additional duties of custom, these are merged for the GST purpose. And special additional duty of customs and service tax, cesses and surcharges, whatever it was there, now they're merged and they made into one concept called GST, whatever we have here. State taxes means which are the state taxes are merged to bring GST was state VAT, central sales tax, purchase tax, luxury tax, entry tax, entertainment tax. All these taxes are merged and they made one tax, GST. This is a benefit given to the general public. They have to understand earlier what type of taxes were there and how much tax we are paying, and now what type of tax we have and what benefit it is there for the general consumer. Next, applicability. GST would apply to all goods and services except human consumption, that is alcohol, human consumption. GST on 5 specified petroleum products: crude, petrol, diesel, aviation, turbine fuel and natural gas. They have not yet started to charge GST, and it is going as per the previous tax system only. These will be added in the future. Exports. All exports and supplies to special economic zones units would be 0 rated. They're saying that one, if we are supplying any goods for SEZ, that is nothing but special economic zone, if we are supplying, or if the SEZ is supplying any goods, then the GST is 0%. Input tax credit. Already I said you people that one. Now, the manufacturer has charged GST here 100. Now, for the wholesaler is charging GST as 150. Here, whatever the collect made by the raw material at the time of GST paid by the manufacturer. So now 150 minus 100 is going to pay only 50 up. Only 50, whatever the amount collected from the wholesaler is going to set off that one with the amount already paid. Now, here, the wholesaler is going to collect GST from the retailer 200. Out of 200, already 150 has been paid here. So remaining 50 is going to pay to the government. Now, out of 200, 150 is adjusted and this 50 will be paid here and 50 here. Now, from the consumer, GST is collected by the retailer will be 250. Out of 250 is going to set off 200. So remaining 50 is going to pay. Now, how much we have paid in the beginning? 100, 50, 50 and 50. That is nothing but totally the entire 250 paid by the consumer and not by the manufacturer or the wholesaler or the retailer, because they got back the amount whatever the tax paid, that is input tax credit given by the present tax system to benefit to the manufacturers. Now, the Constitution 101, the Amendment Act 2016, concurrent powers on Parliament and state legislature to make law for governing and controlling GST. They're saying that one. As per Article 246A, the power to levy GST has been given to the Parliament as well as to legislature of every state. Like GST is enacted by central government, IGST is enacted by the central government, ESG is enacted by respective state governments, UTGST is enacted by central government of India. So like this, they are given that one. IGST will be apportioned between center and the states in the manner provided by the Parliament as per the law, as per the rules and regulations framed under GST. GST will be levied on all supply of goods and services except alcoholic liquor for human consumption. They're saying that one, excluding alcohol liquor for human consumption, excluding that one, for all other things, the GST is going to be levied. Next one. The explanation to Article 269A of Constitution of India provides that the import of goods or services will be deemed as supply of goods or services or both in the course of interstate trade or commerce. They're saying that one, whatever we are importing the goods from other country, that will be treated as interstate supply, and the same concept whatever they are adopting for the interstate supply, the same concept will be adopted for the import of goods from other country to our country. Principles for determining the place of supply and when supply takes place in the course of interstate trade or commerce shall be decided by the Parliament. They're saying that one, the concept of place of supply will be considered and finalized by the Parliament and as per the law, as per the rules and regulations, and the committee people or the GST council decides that one. The power to levy central excise duty on goods manufactured or produced in India is available in respect of the following product. They're saying that when still we have central excise duty on certain products like petroleum crude, high-speed diesel, motor spirit, natural gas, aviation turbine fuel, and tobacco products. On these, still we have central excise duty. However, once GST is imposed, there will be no duty on manufacture of these goods. They're saying that still it is not under the bracket of GST. If the government or the law or the council decides to take all these products, the goods as well as services under GST bracket, then no duties will be levied and it will be benefited for the consumers as well as for the manufacturers. The power to impose tax on sale following products is still provided to the state government. Like certain state taxes, still it is in the hands of the state governments on certain products, like the same thing whatever we discussed in the concept of central. Next one we have here, the same council is recommended from the date from which GST is imposed, the products except alcoholic, and no sales tax will be imposed on these products. They're saying that one, no sales tax will be collected on these products after it comes under the bracket of GST. Constitution, that is the next concept what we have here. GST covers all the goods except alcoholic for, see, in a simpler way we have made that one, excluding alcoholic for human consumption, remaining all the goods or services comes under the bracket of GST. Second one, it means no GST can be levied on alcoholic. It means we should not collect GST on alcoholic liquor for human consumption. Present system of state excise duty and sales tax on alcoholic liquor for human consumption will continue as earlier what it was. As a result, the following bills became Act on 12th April 2017, that is CGST Bill 2017, IGST Bill 2017, UTGST Bill 2017, and GST Compensation to States Bill 2017, which came into force from 12th April 2017. The central government notified 1st July 2017 as the date from which much awaited indirect tax reform in India, that is GST, will be implemented. The implementation of GST took place with the effect of 1st July 2017. This is the implementation date of GST in our country. What is GST? Say GST can be understood easily here. What is GST? GST is nothing but tax on supply of goods or services or both. Means whenever you're going to supply the goods or whenever you're going to give services, so GST, goods and services tax, is going to be levied. Next, goods value added tax levy on sale or service or both. They're saying that it is nothing but here, it is GST is a value added tax levy on sale or service. That is, they're saying that one, it is a tax which will be added for the supply of goods or services provided and where they're getting the benefited. So at that time, the tax will be added for the either value of the goods or value of the services. Next, GST is a destination-based consumption tax. They're saying that one, it is a destination-based consumption tax. Means, like for example, now we are in state A and state B where we are supplying the goods. The tax collected beneficiary will be given for the people who have got the benefit of service. Means the collection here, concept what we have here, it is a destination based tax from where it started. The benefit will be given for the state A even though collected by the state B. Offers comprehensive and continuous chain of tax credit. They're saying that one, the ITC, input tax credit facility, will be applicable till it reaches the consumers, where the burden borne by final. Ultimately, the tax is paid by the final consumer and not by the manufacturer, wholesaler or retailer or any agent. The final tax will be paid by the consumer. Elimination of certain tax on tax concept which we had in the earlier, either in the central or the state, brings uniform tax structure all over India. One nation, one tax. What is GST? One nation, one tax. If I write this concept also, I'll get 1 mark easily. What is GST? One nation, one tax, where uniform tax rates are framed for the entire country and not for the state here, for the entire country. Wherever the goods are moving, the same tax rates are there, and there is no different tax structure for state to state or to the place to place or for the goods to goods. So it is uniform tax structure what we have in the country. Advantage, it is a one nation, one tax, removal of certain tax on tax concepts, increase it easy of doing business. Now the people are coming into the business field, the new and young and energetic entrepreneurs are coming and they're succeeding in their life. Thus the benefit has been given. Low cost of production increases the demand, will lead to increase the supply, because whenever the cost is less, the supply will be more and the benefit will be there for state as well as the central and for the business people also. It will boost export and manufacturing activity. Means if we are giving support to the manufacturers, definitely they're going to export our goods from our country to other country, which increases the economical position of the nation and supports the society also. GST will extend all, including the state of Jammu and Kashmir. They're saying that even in the Jammu and Kashmir, GST is applicable. On 7 July 2017, the Jammu and Kashmir GST was bill passed and state legislature empowering the state to levy GST on intra-state supplies with the effect of 8th July 2017. On 7 July 2017, they added even the Jammu and Kashmir and they made implementation from 8th July 2017. Even Jammu and Kashmir is taken into GST bracket. This is a concept what we have here, and the same concept, the rules, whatever we have, how it was took place, and they're given. The central government and the other council members decided to add the Jammu and Kashmir also. What is GST dual model? GST dual model is nothing but here SGST. See, state GST, state goods and services tax collected by the state. CGST, it is central goods and services tax collected by the central. Integrated goods and services tax collected by the central government on the interstate supply of goods or services. Whenever goods are moving from one state to other state, the goods, then they're going to charge IGST and it will be collected by the central, and the amount of benefit will be there for the central. And intrastate, that is internal movement of supply of goods or services, the benefit for SGST. And see, this is our dual GST model, and the same concept even we have for UT GST. That is the same concept of state. We have CGST and UT GST. This is the concept what we have here. CGST is levied and collected by the central government. It is a revenue source to the central government, saying that one, whatever the tax collected by the central government, it is a revenue for them, and the same revenue will be utilized for the betterment of the society. Even the same concept here we have state, the respective state will collect the tax, that is the revenue for them, and the same amount of revenue should be used for the betterment of the society, that is for the state's benefits. Union territory, whatever the tax collected by the union territory should be used for the betterment of the union territory and increase the economical conditions of the union territory and for the future aspects of business in the union territory. GST in union territory without legislature supplies within such union territory. Central GST will apply to all of India, and hence it would be applicable to all union territories with or without legislature. If there is no proper ruling in the union territory, then the central government will take entire control and they are going to charge the tax on the concept whatever the supply has taken place there. Alternately, the President of India may use his general powers to formulate such law. Hence, laws similar to state GST can be formulated for union territory without legislation by the Parliament. If it has been not comes under the bracket of Parliament, then the President has all the rights to add certain points and make certain law applicable for union territory, and it is applicable as state law. Whatever we have here, the same law is applicable for all union territories, even though there is no proper legislature in the controlling of economy of the Union Territory. Now, dual GST model, what we have here, the definition of Union Territory has been amended with effect from 30th June 2020 under Section 22 Subclause 114 of CGST Act 2017. They're saying Union Territories without legislature, we have Lakshadweep is without legislature, Daman and Diu, Dadra and Nagar Haveli is without legislature, Andaman Nicobar Island, Ladakh is without, and Chandigarh is an union territory without legislature, means where there is no proper control of the legislative law is applicable over there. A separate law is not there. The same state law is applicable in these union territory. Ladakh has been made union territory with effect from 31st October 2019. From 2019, even Ladakh is also called as Union Territory. In our next upcoming session, we are going to discuss the difference between IGST, CGST, SGST, UTGST, and even we are going to discuss the impact, whatever we have here, of GST on country, central government, state government, manufacturer, service provider, traders, and agriculture side. What was the impact, positive as well as negative, how it came, benefited for them or not benefited. We are going to discuss in upcoming session. Thank you to all our 6th sem BBA students. In today's session, we learned about the GST and advantages of GST in depth, and we came to know the concept of GST easily. Thank you once again to all our BBA 6th semester students.